Is QQQY the ultimate dividend generator or a ticking time bomb in your portfolio? Before you get lured in by the high dividends, you should look at what's underneath the hood and see what's going on. In today's video, we're going to take a deep dive into QQQY and see if it's actually a dividend trap. And make sure you stick around because I'm going to make one change in my RRSP. But before we do that, let's examine my portfolio, see how it's performing, buy some stocks, and look at the dividends that we earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners because let's face it, there's nothing that gets you ready for your first day in investing journey, and I do it by sharing my journey with all the ups and downs along the way. So follow me on my journey and we'll get you started on yours. All right, first things first, let's go over to a movie recommendation. It comes from Netflix. It is a limited series, and it's a little bit different than what you're used to hearing from me. It is the Blue Ribbon Baking Championship. It is hosted by Jason Biggs, and he adds his own silly flair. If you remember, he's the actor from American Pie. The premise of the show is it brings together Blue Ribbon winners from carnivals around the United States. These are top bakers in their that are not professionals, and they're expected to bake off to the end, the last man standing kind of routine. Biggs adds his own crazy flair. If you remember, he had the whole experience with the American Pie. And guess what? They do cook American pies or bake American pies in this particular show. So if you're looking for a few laughs that are oriented to your family, this is probably the show to check out. All right, let's jump over into the portfolio. All right, the portfolio is up to $148,043. It's comprised of 4 separate accounts: my cash account, my kids' RESP, my RRSP, and the star of the show, my tax-free savings account. The cash account's currently holding $23,733. It's earned $29.38 in interest in the month of September, and it pays 4.5% interest. But guess what? The Bank of Canada slashed rates again, so that has an impact. It will be dropping 0.25% very quickly. Last month, they earned $91.76 in this emergency fund held with Wealthsimple, and of course that's taxable income, so we need to shoot that over from Wealthsimple into my spousal account to offset that extra income so that we can then take that out later in life at a bit lower tax rate. In 2023, we earned $607.74 in interest in the cash account, and in 2024, we earned $906.98 for a grand total of $1,514.72 to date. All of that's taxable, so like I said, it goes over into the spousal RRSP, so we can get that tax return. And if you've watched some of my other video updates, I talk about the fact I take the tax return, roll it back in. All right, your kids' RESP is up to $69,774. We're going to have $407,000 available to them when they're ready to go school. Down at the bottom here is the asset allocation portion of the portfolio. It's nice because you can see how much is in each sector. In this case, in the first one, we're talking about U.S. equities. At 29%, it's the largest position within the asset allocation, and it's invested in QUU with $20,000 or 94 shares. It's up 25%. The second one I wanted to show you is the Canadian equities. It's only at 11% because the Canadian market only is very small within the investing world, and that's QCN with 55 shares. Lastly, I wanted to show you there is some gold in here, only $1,800, which is 27 shares, but it is up a lot at 27%. Net deposits, $58,859 in the account, with total returns of $10,915, 18% return. Looking at the activity tracker since the last video, we had 2 deposits. We invested in EEMV, ZFL, and QUU. And we had our management fee taken out. That's $24 per month right now, and it fluctuates based on the amount in the account. ZFL paid out a dividend. We had a reoccurring payment. That's $100 for my son, $100 for my daughter. Invested in QUU and ZEA. And then, of course, all of these are set up on DRIP, so any dividends are then reinvested back into the account itself. Over to the RRSP. For the day, it's up $44.20. Over the last week, it's up $38.93. And over the last month, it is up $337. And over the last 3 months, it's up $478. And over the last year, it's up $2,443, which is 16%. And all-time returns on the account, $2,401, which is a 15% return. There's only 3 cents in USD in there right now. I'm not making contributions to this. And of course, any dividends are reinvested. HYLD paid out $2.60, so drips on. It is actually being reinvested back into the account. All right, here's a quick overview of the entire account. As I said, I do like to give you guys a brief overview of all the securities that I currently hold in here. And I am altering some of these to trim them down to core positions that I believe in over the long term. So if you want to look at this particular part, just hit pause. You'll be able to look at it, or rewind if you missed it, because I'm not monetized. But with that said, we are getting there. We're at 849 subscribers and our hour count is growing. Here in the activity tracker, you can see that we had some dividends paid out from Fortis, QQQY, again, and HYLD. All these are set up on drip. Tesla also paid out a dividend, and they're being reinvested back into each security, so they're just compounding on top of each other. And here you can see the most recent one, which was HYLD, which was reinvested back in. All right, so Fortis. I invested in Fortis when I first started investing. My research told me that dividends was probably the way to go, but in the end, I don't believe that. I think that growth is more important right now. And maybe when I get a little closer to retirement, I'll change that. It is a very small portion at $687. So I chose to sell off all 11.2263 shares of Fortis. And then with that money, I converted it in Wealthsimple over to USD at 496.85. Now, I did get hit with that 1.5% conversion fee. Now, if you want to get started with Wealthsimple, use the video link on the screen here. This code will get you started and put 25 bucks in your account. So I bought one share of VOO at $514. And if you don't know, VOO is a great position to hold because you're holding the underlying position. If you invest in VFV, which is the Canadian version, they turn around and actually buy VOO, and then when you get your dividend payout, they hold some of that back. When I invest in the US account directly into VOO, I don't get any of it held back for two reasons. One, it's in a registered account, and I'm holding the actual security directly. So if you're looking to make your portfolio grow a bit more, I would suggest investing in VOO rather than VFV in the RRSP. All right, in the tax-free savings account over the last day, it's up $108.71. Over the last week, it's up $146.78. Over the last month, it's up $939. Over the last 3 months, it's up $1,241. And over the last year, it's up $4,030. And all-time returns on the account up $4,124, which is 12.5%. There's no money in here right now, but we will be depositing our $1,000 in there to make our investments, and we do that every 2 weeks. Stock lending turned on. We've earned $1.67 to date. Not much, but that compounding is really important, and anything you can do to contribute to that is important. All right, Plaza, REIT, REI, XEC, and XIC are all the shares that are on loan and will get paid out on September the 16th yet again. All right, here's a quick overview of all the positions within my portfolio, and you can see CNR there, which was the one that we added in the last video, so check that one out. And again, I'm just giving you a brief overview of all my positions. If you want to see them, you'll have to pause or rewind. Hopefully when in the future that will change if we get to monetization, and I can add some chapters where you guys can jump back and forth. All right, so we're going to make the deposit of $1,000. Now, I told you before, Passive has a glitch. Passive's the program we're going to be using to buy with our asset allocation and track our dividends. Unfortunately, there is a glitch. When I move money from transferring it from my Wealthsimple cash account over to my TFSA investing account, unfortunately, it doesn't register it as a deposit. It won't even show up as a transfer. So my workaround to this is to deposit the money directly from my checking account into the TFSA and then transfer the money from Wealthsimple back to the checking account so they balance out. Now, I am getting rid of the big bank, which is TD, but we're not quite there yet. And when we do, I won't have to do that anymore because we'll be using a different bank. So stand by for what bank that might be. All right, now that the money is deposited into Passive, we need it to update itself so that it can see what we now have. So we have 91% accuracy, and there's our $1,000 deposited into the account, making it $37,731 into the account. Now, the next thing we want to do is I want to add more to a single position, and that one is CNR. I really like this stock, and I want to add more. I want to increase the position from 1% to 2%. So what we have to do is find it in our asset allocation and change it to 2%. But when we take an additional 1%, we have to remove it from another position. Right now, my Canadian exposure was 16% up till last week when I added CNR. And so what we're going to do is decrease our Canadian exposure in XIC by 1%. So we're going to go from 8% to 7%. And once we've added that in, then we hit save. The program will then update itself and it will make its calculations on our asset allocation on what to buy based on the new positions in that asset allocation. So here's what the asset allocation looks like currently as it's updating itself, and it does take a couple of seconds. So once it's updated, we'll see the new version. Okay, now it's updated, so we're going to buy 2 shares of CNR. We are going to buy 2 shares of Plaza REIT, 1 share of QQC, 3 shares of VFV, 3 shares of XEC, and 4 shares of XEF. Again, I always save you I won't show you me buying them. I'll go ahead and buy them and it will update the portfolio. In the meantime, let's have a quick look at the reporting on this through passive. So you can see here what the total contributions in the account is, all the dividends and everything like that. So we can see here that it ends in about March for our contributions, which we know is not true because I'm making contributions every week. Hopefully the workaround will come quickly and we'll see a change in that. I want to be as transparent as I can. Okay, total value of the account through this graph. The green one is the growth, the blue one is contributions. You can see the flat line there. Hopefully that changes. Net change, $37,732. The rate of return on this account is 9.22%, and the investment growth in the account is $14,942. Now here's the dividend chart that shows the dividend. Ideally, I want to see that dividend growth in a steady upward trend. But again, I'm a beginner and I want to share the mistakes. When I started investing, I invested in a lot of covered calls and high yield funds. I'm not saying they're bad, but it doesn't help with your dividend growth when you're constantly changing things. I probably should have started off with more growth stocks and a little bit of covered call and high yield stuff. Instead, I did it the other way around, and so I'm changing that, which is why you see this change in the dividends that I'm receiving. But it doesn't mean that that won't improve itself. It's just going to be a lag where it looks like I'm decreasing. The average monthly dividends right now is $55. Fees and commissions, we've paid 0 because we use Wealthsimple. Make sure you use that Wealthsimple code down in the description below. Here is a nice graph to show us each security and how much each dividend has paid out in total returns for each one. And lastly, the total dividends on the account is $969. Today we're tracking a hot topic. Is QQQY a dividend trap? If you're intrigued by QQQY's high yield, but you're wondering whether it's too good to be true, keep watching. Great, okay, let's focus on the concept of a dividend trap with respect to QQQY. A dividend trap is an investment that looks attractive due to its high income or yield, but it may come with risks that could ultimately harm an investor's returns. First, a quick recap. QQQY is an ETF that uses synthetic covered call strategy to generate income. Unlike a traditional covered call, it doesn't hold the actual underlying stocks, in this case the NASDAQ 100. Instead, it uses options or derivatives to mimic the exposure and income of a covered call strategy. This strategy allows QQQY to offer such high attractive yields, but here's the catch. The high yield could be a dividend trap, and let's talk about why. High yields can sometimes be a sign of trouble, like declining asset values or unsustainable income strategies. In QQQY's case, there are a few reasons it might be considered a dividend trap. Let's first break down the reasons why QQQY could be a dividend trap for some investors. First, QQQY's synthetic covered call strategy might generate a high yield, but it also carries a significant risk. The fund earns income by selling call options on the NASDAQ 100 stock. And while this can generate attractive premiums, it caps the potential upside. So in a strongly rising market, your returns might lag behind those of the broader market. And that's representative of the way the market had been up until a few months ago. Second, there's the risk of declining asset value. This is important. The income from QQQY's call premiums might not be enough to offset the potential declines in the value of the underlying NASDAQ stocks or the derivatives that are used. In a bearish market, the fund could experience both falling asset value and reduced premiums. And lately, the market has been changing. The third, the fund strategy is highly dependent on market conditions. If the market is flat or only moderately bullish, QQY might perform well. But if the market is very bullish or bearish, its performance could suffer, and the market has definitely been showing signs of that recently. You could end up receiving high dividends, but with a steadily declining NAV or net asset value, which is a classic dividend trap scenario. This fund, since I purchased it, based on this chart you see here, has been steadily decreasing every single month because they pay out such a high dividend. They started off with promises of paying over 100% dividend, which in my math doesn't work. And it's very clear that the net asset value on this particular fund could steadily decrease unless they change the premium that they're paying out in the dividend. Now let's talk about some risks specific to QQY that investors should consider. As mentioned, QQY's upside is limited by the covered call strategy. This means that in a bull market, you won't benefit from the full gains of the NASDAQ stock, making it hard to keep up with the market. Next, there's the volatility of the derivatives. Since QQY relies on options and other derivatives to replicate the NASDAQ 100, any mispricing or sudden market shifts or unexpected volatility could lead to bigger than expected losses. And finally, there's the question of dividend sustainability. Just because a fund has a high yield today doesn't mean it will maintain that yield tomorrow. If QQY's strategy stops working or market conditions change, those high dividends could quickly shrink. So is QQY a smart income play or a dividend trap? It really depends on your risk tolerance and your investment goals. So is QQQY a smart income play or a dividend trap? It really depends on your tolerance and investment goals. If you're an income-focused investor comfortable with risks of a synthetic call strategy and you believe in stable or modestly rising markets, QQQY might be suitable for your portfolio. However, if you're looking for stable growth or if you can't stomach the risk that come with derivatives, then the fund very well might be a dividend trap. I hope you enjoyed this deep dive into QQQY and the potential risks of a dividend trap. I'm very interested to hear your comments on QQQY, so leave them below. If you liked the video, smash the like and hit the subscribe button to help the channel grow. If you're interested in supporting the channel, just by simply watching it, you get my hours up and get me closer to monetization. But in the meantime, you can buy me a coffee or use my links below. For instance, if you want to get started with passive, there's a link right here on the screen. You can save on their yearly subscription. And if you want to get started with Wealthsimple, you can also use my video description below. It'll put $25 in your account, but it also helps support the channel. If you want to follow me live, jump over to Passive where I do all of my trading and you can chat with other investors. And if you're just getting started with your investing journey, you should watch this video right here.